Okay, that's silver priced in US dollar. That's the daily. Silver has not given its final verdict on the correction here. I mean, the wave count, the way that I see it, is still not ready to receive a final labeling. I think it is still an ongoing process, this corrective phase that we have seen here. I still think that the phase coming down is fairly clear, that we had 5 legs down here on the daily. So this is very important element. When I look at the chart of gold, and I sort of, go shuttling between both gold, silver, silver, gold, and I keep looking, keep comparing. I see two things emerging here. I see that in the case of silver, we have a distinct move that ended here, and we can work with fairly clear triangle that was formed here. Now, the date to remember is the date of the low here, that appears to be also significant in the case of gold. You will see in a sec. So I would just say that this is an element, okay, that could be taken as one leg in a very complex correction. That could be an A, that is composed of an A, B, C, X, A, B, C. These things can happen. You have a pretty big structure here that is an A. Then we have a classic triangle A, B, C, D, E, that could be taken as a B. Don't confuse with this scale of B. Yes, this is a B, and now we're coming down in a potential C. So we have an A, we have a B, we have 1. We are still waiting for that second wave to terminate. That will send silver lower in a third, fourth, fifth, without necessarily breaking the floor, and then I would expect a huge rebound. This is long-term projection for a possible wave count. This is not written in stone. Things could still change. What I want to emphasize at this point in time, that the run down here deserves full attention, that this is really a 5-wave run. This is really important to observe that. I want to show you here on the 60 minutes, because you see the point is to get at least one element to be defined very clearly, where we don't have any doubts, or if you want not many doubts, and it's quite possible that that's the case here. I feel that should be taken as a firm 1, 2, 3, 4, 5. So that's our one way, and we don't really know at this point in time if it is one way. Look, it is possible that what's going on here is going to morph into a triangle. I put several alternatives for you. One is A, B, C, D, E. Now that will play out if silver is not able to climb above this level by a stretch. That's 16.8. What I mean by stretch, I'll show you in a sec. So you'll end up with an A, B, C, D. Few more wiggles down here. Okay, basically hardly moving, going to 16.6, 16.7, spending another day or two here, and then boom. At that point, we have a very strong case of treating this as a triangle, which means that this is likely a B. You see, that will be your A, that's your B, and in fact what we are saying is that we are now going to go down in a C, which is giving us quite a bit of guidance, because we have the measurement of the A, and we can assume in normal circumstances that we would have at least the run of the A from this spot roughly. Okay, so that means $1.50. We have seen here 16.2 roughly to 17.7. That's $1.50 from around here. That takes us to, let's say, 1.5 to 15. 16.5 knocked down. 1.5 takes us to 15. That is just really very basic analysis that is taking us down in that C. Now, the alternative, pay attention, the alternative is still perfectly possible, and it's all up to Mr. Market, of course, to show us its hand. We have here an ABC that could be taken as an A. Don't confuse it as part of the run of the ABCD. Okay, so that's your A, and then in fact we start now a triangle with this being an A, that's a B, that's a C. Stay with me, I'll show you. So you have an A, B, C, D, E, and then a pop. So you have an A, you have a B, you have a C, which would qualify this as a perfect possible second wave, not necessarily a B. You have an A, I repeat, you have an A, B, C. This becomes, again, very critical level for silver not to get there. That's 17.7. That's going to get us into trouble with this interpretation. It has nothing to do there. 17.7 is out of scope for silver right now. And if we end up with an A, B, C like that, then it's actually telling us that we might be witnessing now a five-wave run beginning from here. So 1, 2 down in a third wave, and then a 4, and then a fifth. That's slightly different ball game. Okay, so these are the two major options that I see at this point in the case of silver. Now here's gold. That's the daily. I must admit that the price action that is still holding gold at a fairly high level, but it is not convincing as far as I'm concerned that it is preparing for a breakout. No, I still think that the odds are sitting with the bears short term. Short term, I would say even not just a few days, I mean could be actually several weeks if not several months, that we will see gold breaking down sharply, possibly all the way down to 1120. Okay, with this scenario playing out, that's an A, that's a B, with an A, B, C, D, E like that. And it may have actually begun the C. The C may have begun, or we might have to see through a few more twists and turns here before we get this big slide, panic slide in gold, when the dollar index will take off in that 303 that I explained to you. We are very likely to see a very dramatic breakdown here. Make no mistake that this is a critical level for gold. That is 1300, 1302. Cracking through this level, closing, giving us a daily close under this level could actually mean the slide is underway. Okay, and of course this also remains a critical level right here. We can even fine tune it. Well, this is the 1374 remains really the all-important level for us to watch. Okay, and then you have the lower highs that have been registered here, and we're going to have to work very carefully here with the subdivisions. If our E leg ended here, which means that the B ended here, sending it down in a big C, then of course this is a critical level that comes at 1358 or so right here. If the E has not terminated, and we do need a few more wiggles, then the next level up, very important, is obviously the mauve line that you see here. Let's now zoom into the 60 minutes and you will see the potential interpretations here. So right now I would go along with this. I would say that this is really the end of the E, okay, which in turn ended the B, okay, and that is the beginning of the C down. Okay, you're with me? So we have 5 legs, fine. We had an ABC playing out here, very dramatic. Okay, if I'm reading it right, so that is potentially the end of the second wave, but I think it's more likely that in fact we're going to go for something like that. So we had an ABC, which could be a B. Okay, so that's an ABC A, ABC B, and we potentially look at another ABC playing out this coming week. That will go and pop it. We'll see gold popping its head above 1348, not knocking down the previous high, yeah, not getting there, and then sinking sharply, breaking back under 1319 would tell you that correction here that relates to the first leg is over, and we're going in a third wave. It's possible there'll be slight variations to the set of twists and turns that I'm showing you here, but in essence I hope you get the point. This is important, very important. This is very important. Okay, what it does here over the next 2-3 trading days could take the shape of various combinations of ABCs, but these are critical levels right here. Pop its head, sink, fine, we could be done with the second wave. Pop its head above this level, we have to reassess the situation. Breaking through this level, we could be on our way to much lower lows in gold.